Good morning everybody, it's Chris here from Serene Education with the 4 Majors Notice update for the 13th of May 2011. We're going to have a look at the daily time frame for the euro against the US dollar on this pair. You'll notice that past number of days we've seen price pull back off a very solid resistance level at some stage at 14,8500, and now what's happened is we've now seen price pull back and is currently testing prior resistance and support at roughly the 1400 2500 mark. At the moment now you can see past couple of days we've seen a consolidation, breakout, consolidation, and we're seeing consolidation as we speak now. News out this morning early at 7 AM GMT is we've had Europe, we've had the French figures on their prelim GDP quarter-on-quarter figures, which were forecasted for 0.6 and we came out an actual at 1, so there's strength, there's growth in that department. And yet again on German prelim GDP quarter-on-quarter figures, they were expecting 0.9%, it came out at 1.5, so steady growth on those two fronts, which is good. It's there, you know, there's momentum that's starting to come about, and that's exactly what we want for the first quarter going into 2011. If we're seeing these figures, then it bodes well for second quarter, third quarter, fourth quarter of this year. So if we can keep up the momentum, then it all means that there's the momentum that's starting to drive the market slowly. So what can we expect? Well, if euro can hang on to this and look at this area here as a potential support area, and price can get back up above this all important 50 period moving average, if we get a nice bullish engulfing candle here. We've still got some more news out today on the European side. PPI month-to-month figures, they're forecasting no change at 0.4%. Comes out higher, then you know it could be interesting. Then at 9 AM GMT this morning we have Mr. Tricker speaking, so that we want to listen into. And then 10 AM for euro again we have the flash GDP quarter-on-quarter figures. The previous was 0.3, they're forecasting 0.6, so if it comes out higher than that, then you'll also see some you know, it'll bode well. We could be in for a bit of a move. So let's see if we can actually hang on to that. At the moment now CTC has gone red, so it's just telling you heads up, be aware. The most important thing on this pair over here though is we need a genuine breakout. If this is to continue falling, then we definitely need, if we see another bearish engulfing, then it'll definitely mean that the bears are in favor, and we should be looking at another opportunity down to roughly in the 1400 mark. If it doesn't stop there, then we could look at further hemorrhaging right down to the 13800 mark, and then yet another area well down here at the 4500 mark. So, and a bit of another stop roughly around the 200 pair moving as well. So very interesting. If you can see the European or euro gaining strength this morning as figures come out, and they tend to be very bullish for the pair, and if we can keep above this area, then great. We could see further, we could see a definite bounce to the upside. However, if the news is very stagnated and not a hell of a lot of changes expected, and the news is just slightly negative, then we could just see price obviously confirming, and we could see that being reflected in the price movements for this morning. So be aware of that. You can see that the news out in Europe has seen a bounce to the upside. Higher swings on this pair. The CTC is quite choppy at the moment. That's on the 15 minute, the 30-minute chart. You can see, if I just zoom out, we are seeing higher swings since yesterday afternoon. We've just broken out, and if we can stay above this area as I mentioned, and then head higher to roughly the 14300 mark, which will be our next resistance level. If we can break and stay above that during the course of today, then it could bode well, because we could see price literally going back to the 4200 mark at least, so reattempting that area. You just look at the hourly, for example. We have had prior resistance level yesterday afternoon, so ideally what we want to see is price is now testing the 50 period moving average. If price can pull up and stay above this area here, then great, because it'll be trading above a prior support and resistance area, and it'll just mean that we are now seeing momentum drive to the upside. If it fails to break higher than this, then what we're seeing is just a breakout, a pullback, a consolidation at this area, and then a continuation to the downside. Because that's what it's pretty much been doing these past couple of days. It's pretty much breaking out, pulling back, and breaking out, and pulling back, breaking out. It's just a continuation, and that's where we get the trend to the downside. So be aware of it. See how you can factor that into your trading, and take it from there. You can see the intermediate trend line, or the trend line for this time frame, is in play as we speak. Apologies for that. So we need to see a definite break and close higher than this prior resistance and support, as well as the trend line and the CTC must go blue on either side. We've got the blue arrow and the blue candle, but we won't get that unless we actually see price trading above the moving averages for one, as well as this trend line. On to sterling. Good old sterling against the US dollar. Here again, you can see yesterday we saw momentum shift to the downside, especially after this bearish candle here. After a bit of a bounce, it failed to find a support area at this level here, and even though it traded higher, it still closed lower during the latter part of the US session and closed lower than the support area. And by doing so, just confirmed that the drive was still negative, and also by doing that breakout, we've now seen a lower swing. So we've seen a high, a low swing, and they're all lower than the previous one, confirming the shift in market sentiment and the downtrend. However, we have this prior support area here at the 16,2500 mark. It has tested it on 2 occasions on a daily. It needs to close lower than that. Close lower than that, then obviously we could be looking at further extensions to the downside. It'll be trading not only below the 20 but also the 50 in that case, and we should be looking for an opportunity roughly, if anything, back to the 1600 mark. There are 1 or 2 areas along the way in between all this, but it's quite noisy in between here. But roughly the 1600 mark would definitely be a protocol for this. So CTC on a daily time frame, however, is still positive. You can see it was very positive even through this choppiness here, and then we saw a breakout. So trend direction, you can see here, is quite strong to the downside. If I draw my trend, intermediate trend, peaked up, fell to swing low, and now it's trading below a moving average. It fails to find support above 16,2500 as well as the 50-period moving average, and it closes negative again this evening. Then we should only be looking for opportunities to go short, and the CTC should in the near future also go red in that case. So intraday, look for opportunities for a break below 1625. Mark it on your hourly and 30-minute charts. So there it is. If we get a lower swing and fails to break the 20-period moving average again, all you'll be seeing is price being squeezed now. It's running below all the moving averages. The only thing it needs to break now and close lower than quite a bearish engulfing would be the 16,2500 mark. So there again on the 30-minute chart, 1625, here it is. Make it nice and strong. It needs to close lower than that with a nice bearish engulfing pattern. So wait for a 30-minute close on this time frame. You could go as far. We've seen spike outs. If you really want to, you could look at roughly if it closes below 1623.50. There's 1 or 2 pips in that. It won't be a hell of a lot giving back to the market, but if we genuinely get a decent bearish engulfing and it closes lower than this, then it'll definitely confirm that all we're seeing is lower swings, and because of that we should see further sentiments in the downside. However, the more it bounces along this area at 1625 and fails to break lower, then there could be a case in point that we might see a consolidation taking place and we could see price rally. Just look at your relative strength index to see if you are getting a convergence occurring. If you're getting that convergence, because we're in a negative trend, it could be a signal that we're seeing the bottom of a trend and we should see possibly a pullback occur. Next up is the US dollar against Swiss franc, the Swissy. Let's have a look at the daily time frame. You can see the US dollar finding a lot of strength against this pair in the past couple of days, and what we're seeing now, price is failing at the 0.8900 mark of trading higher. Prior support and then a resistance, and now we're finding resistance again at this area. Ideally, want to be trending higher than that to confirm further extensions to the upside. A failure to do so would confirm this trend resistance. This is a daily. Here we go. So we have two ports of call of resistance here. So this could definitely be, if we see the US dollar gaining strength today against the euro in particular on those type, then we could see a confirmation of resistance, and failure to break that would definitely just confirm a pullback in this downtrend, and we could see further extensions back down to our next port of call would either be this prior one at 88.0 or ultimately right down here to 0.860. So for this to confirm further extensions to the upside, we do need it to clear both the trend line as well as the prior support and resistance line at 0.890. So that would mean a daily close higher. Bullish engulfing this candle here would definitely confirm that. Intraday, just make sure you put in those areas 8,900. That's the all-time high. That's the area it needs to break above, as well as the trend line. You can see on a 4 hour, for example, that 8,900 mark is in tie with the 200 period moving average. So there's a lot of resistance at that time frame. So we need to see a lot of good news coming out in favor for this pair. Otherwise, all we're going to see is consolidation taking place. And then look at the relative strength index to give you confirmation of possible divergence occurring at this area here on maybe an hour or 30 minutes, and then we can look for a clear signal for possibly a shorting opportunity. We need a lot of good news for US dollar, or a lot of bad news to on a lot of the other pairs to actually give you that oomph to break above this very strong resistance level that we're seeing at this level at 0.890. So that could be interesting to note. 30 minutes, you can see consolidation over the Asian market session, but nonetheless we are getting swing highs, and that's the most important thing about this. And as long as it can keep those swing highs or maintaining those swing highs, then we could see a possibility of the 0.8900 being retested again. So we're in a trend, be aware of it. This candle here, the 30-minute candle, needs to close higher. If it can close higher than this noise we've seen here on the Asian market, close definitely bullish engulfing above this area here, closing roughly around the 88.70 or 88.80, definitely give us a clear signal of further upside movement, because we're getting a nice support area on this trend line. But if it fails to materialize and push higher, then what we could see is this now forming another swing low from the high. Have a look to see if this area here on the relative strength index is now dipping. So these two ports over here on relative strength should be higher, but RSI would be going negative. So as price is still pushing higher, RSI is diverging from each other, and that's a clear signal. So we've got a sell signal here. Ideally what we want to do is see price fall through this trend. Ideally looking for the CTC on either side to match, and then we should be looking for opportunities to at least the first port of call at 88.20. Failure at that level there could see price fall to the 87.80 mark, and then we have another area roughly around the 87.350, and then ultimately another one here at 80.7100, and then 86.68. So there's a lot of potential targets to the downside. Strong resistance on the top. Got to break the strong resistance. Failed to break strong resistance today. We just confirm consolidation at a resistance area, and we should be looking for possible shorting opportunities in the days to come. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily time frame. Here again, we saw price pull back, but as I mentioned, the closer we got to 8100, price strong was support and resistance level for this pair. We have now seen a failure at this level and a spinning top, and we've seen price in the Asian market fall lower, and European session open this morning, we've seen the momentum continue to the downside. If price is unable to break above the 8100, then we're seeing a failure, and as well as the 20 period moving average, which is acting as a resistance level for this pair. It's still trading below all the moving averages, and the CTC is still in our favor, so we should only be looking for shorting opportunities. This is just a pullback in this downtrend, and failure to break higher than 8100 will confirm that this is definitely just a consolidation in a breakout, and we could see possible attempts to 80 in the next couple days, weeks. So if this pair closes lower today, then expect nothing more than opportunities to look for a sell. So intraday, just make a note of that. 8100 is the resistance level for this pair. It needs to be trailing well above the 8100 in order to be considered bullish. If it continues or remains to be trading under the 8100, you should be only looking for opportunities for selling. You can counter trade, but I won't recommend it, especially on a volatile pair. So as it stands now, everything's in your favor. We should only be looking for shorting opportunities. If you look at things at the moment now, on the 4 hour for example, it's trading below a 50 period moving average. If it fails to trade higher than the 50 period moving average during that course of this morning, so if this candle closes and still lower than the 50 period moving average, we'll definitely confirm a selling opportunity, because that 50 period moving average is going to be the 200 period moving average you see on an hourly chart. So if price fails to break higher than the 200 period moving average, or in this case just make it the 80-70 mark, then it's definitely confirming a breakout of a consolidation area. You can see that the swings are now low. This is a very messy support area, and if it fails to break higher than the support, then all it's showing is confirming that the momentum is shifting from bullish to bearish, and by it not being able to break higher again on this level here, it's just confirming that we're seeing a breakout, pullback, a consolidation, and then we should see a continuation to the downside. And our first port of call would ideally be the 80-50 on an hourly chart to start with. So looking at the 30 minutes, we have right through the 200 period moving average to the 80-70, but we also got that. So anywhere between the 80-70 and the 80-75 mark, we have this consolidation, this resistance level that needs to break above. If it fails to do that or capitalize at any one of those stages, then obviously what we're seeing is the drive to the downside, and we should be looking for an opportunity to probably get in roughly around the 80-50 mark for further extensions to trade to at least this area here at the 80-15 mark. So bide your time, wait for 30-minute candle to give you some sort of idea, indication. The CTC is in our favor. All we need to see is a nice bearish engulfing here, which should definitely confirm further downside movement, and we should be looking for opportunities, as I mentioned, to the downside. It needs to be trading above 8100, so there's a lot of momentum it needs to be trading above this area in order to look for potential upside movement. So until such time, look for opportunities for possibly a consolidation of this area, followed by further downside movement. That's it for today, guys. I hope you have a fantastic trading day. It is Friday, so remember, at the end of the week, a lot of positions might be closed, so we might see a lot of pullbacks in positions that have been selling all week, or we might see a lot of consolidation or pullbacks in a lot of buying situations we've seen this week. So be aware of that. All that remains today is have a fantastic weekend with family and friends, and I hope you've been very, very profitable this week. And all that remains me to say is trade serenely.